Peter Rose, Longwood Currency Trading. It's, well, we're into the new year of 2023, and I took a pretty bad hit at the end of the year on that position that I had been talking about the last few videos, and my fault. Okay, I got the timing wrong on the trade. I stayed with it way too long. When it started to go in my favor, I backed the truck up and loaded a lot into it, and it went against me in a big way, and I held on again, and I closed the trade out right before New Year's Eve day for about a, oh, I don't know, 25% hit against my my bank, and significant hit against the risk. So the issue comes up, well, why was I so stupid that I'm going to lose such a large percentage of my bank? And it's because of tax reasons. The issue is that without it being January 1st, I probably would continue to hold the trade simply because I have faith in the premise that I made the trade under, and so therefore in time I think it would have come to fruition. I've held it for a couple of months, month or so, and it hasn't gone in my favor. It's gone massively against me, and maybe I fell in love with the trade, and what can I say? But according to the way that I trade, I've made a lot of money this year, and so therefore any money that I make that's above what I started with at the beginning of the year is free money. So I end up making about 25% return against my risk for the year, even taking this significant loss. If I didn't take the significant loss, I would have been up 80 or some odd percent on my money, and I'd probably look like a hero. But the reason that I took that loss, despite the fact that I think it will turn around, is because had I not taken the loss and carried that trade over into the new tax year, I would have had to pay taxes on the money that I made, which was a negative number at the time, but it was still a big positive number, and I would have paid a lot of money in taxes. So by cutting the trade off, I save and paying the taxes that are due on the gain that I have, I saved about $30,000 in taxes. So now I go into to next year, and I start with a different balance. I can put the trade back on. If it goes to my target value, that's great, and I pay the taxes in that tax year on real gains. If it doesn't go back in my favor, if I wouldn't have taken that tax loss this year and paid the taxes on that and carried that forward into the next year, and then it didn't work out for me, not only would I have lost the tax money that I paid on the phantom gains this year, but I would have lost the overall amount of money that I have to record for the following year. It would have been stupid. So I take the amount of money that I actually lost, and I subtract off the tax savings of, as I said, about $30,000 from that, and that brings the loss down, a little bit. That's forced metrics, right? When you find yourself in a position where you're trading and taking losses or holding gains and stuff for tax purposes, you're no longer trading. It's like politics, right? You're not doing it for the greater good. You're doing it because the greater number of people are telling you better do that or you're not going to get elected again. And that's just stupid. But you got to play by the rules of the game that are there. And so in the United States, anything that I'm holding on the books, if you're not on an accrual method, counting method, which I'm not, I'm on a cash accounting method, you owe taxes on that. And so it was a tough decision to make. If the losses wouldn't have been so bad, if it would have been $10,000 or $20,000, I would have carried that over. That would have been fine. But they weren't 10 or 20,000. So, we caution everyone when you have a non-farm payroll event, for example, come up. You don't want to trade. You don't know where that price is going to go and where it's going to settle down. 5 times out of 10, 6 times out of 10, it settles back down to where it was before all the shit hit the fan. But you don't know that. It could be substantially against you, or it could be substantially in your favor. And so you don't trade non-farm payroll. You just don't trade after a certain time in the morning. I mean, non-farm payroll in the U.S. is, 8:30 in the morning. So a lot of people will trade up until 7 or 7:30. Because the rest of the world doesn't care about non-farm payroll unless it's a USD currency pair. And other people will just say, it's non-farm payroll Friday, I'm not going to trade at all. And that's probably really good advice. I don't trade non-farm payroll days unless I'm just trying to clip off 5 or 6 pips. And I'm pretty sure that in the flush of it all, I can get that. But generally, you're not saying, here's my trading plan for the day. There should be no trading plan for non-farm payroll day. And you don't want to get yourself into a situation, whatever country it is that you're in, where your trading decisions are being based on some stupid friggin' tax deadline that you have to be aware of. We avoid that, right, as day traders. However, as a day trader, when you have a trade that's running in your favor, why not carry it forward into the next day and 2 months out if it's still in your favor and hasn't clicked out on a retracement? And so if you're in a positive carry trade position at tax time, it really doesn't make any difference because you haven't closed the trade. So you don't get credit for that. You could have $100,000 in gains on that last trade that you carry forward, but whatever your balance was before, let's say you made $22 for the year, and now you've got a running carry trade into the new year that's showing you $100,000 of profit. You're only going to pay taxes on the $23 of profits that you booked for that year. And then you can carry the 100 into the next year and book that. If it doesn't work out, that's okay. You made $23 the previous year. It's up to you what you're going to do the following year. But you're basing those decisions when it's a negative against you on the tax consequences. And that's not something that you want to be faced with. I saved $30,000 in taxes because I got out of the trade. That's not the situation you want to be in because it means there's a shithouse of money that you just lost, right? So just be aware that when you're trading, be sure you're trading and not you're being influenced by signal services or some jackass on the videos that's saying, you ought to buy this, sell that, do this, or whatever, or your own fanciful flights and delusions and opinions that force you to do stupid shit. As I tell you, I have a little bridge troll right here on my left shoulder. His name's Ed, and he whispers in my ear to do stupid shit. And for the last month, Ed's been whispering into my ear, and unfortunately, I've been listening to him, and it cost me. If you're making a pretty good salary, it cost me 2 years of your salary. So it's a lot of money. From a percentage on the account, it's not that bad, 25-30%. But it's a lot of money because I trade 6-figure account, okay? you have to put things into proportion for what you're doing. Yes, I lost a lot of dollars, but from a percentage standpoint, it wasn't as great. To put it into perspective, if you were trading a $10,000 account and you had this massive loss that I just survived, you'd still have money. You know, you've got $10,000 account, and let's say that the margin is $5,000, $6,000. So you've got $5,000 or $6,000 of runway that you're using to increase the size of the position later, or as a buffer for losses or whatever. So you'd lose, you know, $2,000 on a $10,000 account. It's a bad hit, right? $3,000. It's a bad hit. $4,000. It's a bad hit. But you can still come back from that. So regardless of, if you, let's say you lose $3,000. What if you lost six? You know, I mean, it's recoverable as long as you have a good win to loss ratio and an average win value that's pretty good. Sometimes we do stupid shit, right? And you're going to take a loss. If you don't do stupid shit, you won't take those big losses, and your account will grow. So you shouldn't be trading the way that I'm trading. I'm not trading, as I've said many times, to pay my light bill. I'm trading to make $1 million. I'm not going to make $1 million on a $50,000 account making 50%, 80% a year against my money. It's not going to happen. I have to have a large account, and I have to be willing to risk a large amount of that. Now, regardless of the amount of money that I lost, I still am positive by somebody's yearly salary for the year. So I don't have any regrets about taking that loss. But if you're trading a $10,000 account or a $20,000 account and you're trying to pay your light bill, you don't do stupid shit like that. And I don't teach that when I work with students. They all say, oh, you know, you come on the line, you talk about, you know, you made $900 2 hours while you were on an airplane, and you know, you come back and you say you make $3,000 today and you made $900 yesterday, and you're making an average of, you know, $800 a day, day in and day out, and 3 or 4 times a week, you know, and you made all this money, and now you're going to lose it all. Well, yeah, because I'm not trying to make that account grow so that I can go from paying my light bill to paying my mortgage. I'm beyond that. I don't have to worry about paying my mortgage. I'm fortunate that I retired after a 40-year career in real estate and as an investor, and 33-year career as a software engineer. I had the money to retire. I paid cash for my house. I don't need the money from trading. I made $1 million in real estate. And so what I'm trading for right now that I figured out what to do, and I'm able to safely trade large six-figure account and make that grow, I'm working my way through. I started in 2022 out trading 3 full lots. And I've ended up the year trading 25 lots and more. Going at the beginning of 2022, trading 3 lots, and going to, you know, as December, I'm trading over 20 lots. So I'm not trading 20 lots to pay my light bill. You know, I'm pushing the envelope on that and pushing it all to the center of the table, because I'm not looking to make $1,000 on a trade. I'm looking to make, well, yeah, I mean, when I'm carefully picking my way through, I make $800 a day or $1,000 a day. That's reasonable to do. I don't trade every day. Sometimes I'll have a carry trade that'll go 4 or 5 days or a couple of weeks. And many times the amount of money that I make, although a large dollar amount, probably wouldn't be quite as much as if I just traded on a daily basis, shut everything down at the end of the day, and was fine. That's really the way that you should be trading. But when you have a large account with the capacity to back up the truck and throw everything against that, and all of a sudden you find yourself, instead of trading three full lots or 5 full lots at $30 a pip to $50 a pip, now you're trading $20 or $200 or $300 a pip. You can make a lot of money with short pip gains. And so when you see those opportunities, you go in as a probe. If it moves in your favor, you go in again, and then it moves in your favor, you go again. Or if it goes against you and turns around and starts to go in your favor, you go again. Well, once you get the point where you figure that you've got the momentum of that price going and it's going to get there, you back the truck up and you put it all on the table. And you just have to make sure that you don't lose more money than you had when you started the year. In other words, if I start the year with $10,000 and during the course of that year I make $10,000, then the most that I want to lose during that year is $10,000, because I can make the $10,000 back. But if I lose $15,000, whoops, now I've only got $5,000 in my account, and I'm going to have to make 100% return against that $5,000 just to come and break even on the $10,000 that I had when I started. That's the mathematical problem that a lot of traders don't understand, and they argue with me about the way that I am teaching the trading and how to be consistent in the trading and not trying to swing for the fence. You don't swing for the fence unless you have enough money such that you can take an enormously big hit and not go below the amount of money that you start with at the beginning of the year. I mean, there's mathematics involved in this, and I go over this with folks that do consulting with me, and they get jacked up because they don't believe the mathematics. And then they go in and they get in trouble, and they call me and they go, "What the fuck?" And I go, "Well, I told you about that. You can't do that." "Well, that's not what you do." "Well, no, it's not what I do, because I've got 6 figures. You don't. You're trading a $10,000 account. You can't do what I'm doing. If I'm driving a race car and you're driving a standard Subaru, you can't do the track like I can. I'm sorry. It doesn't work that way. That doesn't mean I can't teach you how to drive the Subaru really good so you can gain the skills necessary in order to get on the track and compete with me. But you can't compete with me in a Subaru. You can't do the same things. And the trading is the same way. I'm trying to show the folks that want to pay attention to me how they can first learn how to trade, because most of you don't know how to trade. I can tell that from the questions that you're asking. You're asking the wrong freaking questions. Well, what do you think the Fed is going to do next week? Blah, 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 blah. Who the fuck cares? If you're trying to learn how to trade, that has nothing to do with learning how to trade. You have to learn how to trade. If you learn how to trade currencies, you can trade stocks, bonds, cars, houses, old tires, trade anything. Trading is trading. I'm trying to teach trading, a skill that'll stay with you for the rest of your life, not just if you're trading currencies or stocks or indexes or something like that. Who gives a shit? Once you learn how to trade, as long as you don't lose more money than you started with at the beginning of the year, you're okay. As Joseph Gibbons, former pit trader on the Chicago Board of Trade, said, it's not how much you make, it's how much you keep. If you can keep just what you came to the table with and make a small percentage gain on that, you are doing really, really well. Because what's going to happen is that you're never going to go into that situation where you've got $10,000 and you lose $5,000 and now you got to make 100% return just to get back to where you were. If you had started with $10,000 and you make $10,000 and you lose $5,000, you've still got $5,000 to the good. You're 50% ahead for the year, and you just lost 25%, right? Or, yeah, 25% of your gain. Well, you're in good shape. And the reason you're in good shape is because now you found out what you made your mistake on, or maybe it wasn't a mistake. Maybe you just did like I did. I think something's going to happen. I'm going to put my money where my thoughts are, and we're going to see. And we're okay. I've still got a lot of money left. And it isn't even amount. I've still got a lot of money left. I've got a lot of money. It didn't hurt me that bad from a percentage standpoint. The dollars do. But as long as you don't go to the well with your account, with your original amount, and so you start with 10,000, you make 10,000 or 15,000 or $5,000 or whatever it is, and you lose 3 or 4 of that, you're okay because you're still trading. And then an opportunity comes up and you go, wow, I'm all there, I'm all over that. And you got $14,000 in your account, and you throw it all against a trade, and it goes up and you make $1,000 or $2,000 or $5,000. That's how you trade and increase the size of your bank. All you're doing in real trading is you're picking your way along, trying to make enough money so that if you take a big hit, you don't go negative. And you're just waiting. So you're building that account and building that account, and you're waiting until the opportunity comes where you can put your money at risk. What's the point of having $100,000 in your account if you're going to risk 20,000 of it? What's the point? What you may want to be doing is just working with 30,000 of that 100,000 and playing with that a little bit. Look, you make 10 pips a day, that's $300. If you could do that 3 times a week, that's about $1,000 a week. What is that, 70,000 bucks a year? You know, that's great. But when the opportunity comes and you know what you're doing, you know how to trade. You don't just know how to connect the dots, but you know how to trade. You push that money in there and you go for it. But you got to be very, very careful not to lose more than what you put at risk. And you have to be very aware of NFP, and you have to be very aware of when the gate goes down for tax purposes, because you can get yourself in a real twist, which is the situation I found myself in. I've held this trade for a couple of months. Nowhere did I ever think that I was going to hold a trade that long, that it would go to the end of the year and I would have to worry about a tax consequence. It just worked out that way. What I should have done is I should have said, whoops, this thing isn't working. I'll take a $10,000 hit right now, or $15,000, and boom, and I'm out. And then maybe I would have picked up the correct real trend at that time and rode that. You know, I can sit here and say, well, if I would have done that, then I would have made $200,000 this year or something. I didn't. Okay, I'm going to make 25% on my money, and I'm proud as hell of that, because I didn't go to the well. And next year, let's see what happens. You know, at 25%, let me just figure that out. Rule of 72 here, 72 divided by 25%. It takes you under 3 years to double your money at 25% return. That would take some taxes out. Call it 3.5 years to double your money. What's wrong with that? I've got a 6-figure account. Oh shit. You know, that's how the folks that got a lot of money make a lot of money, as long as they follow Gibbons things. You know, it's not how much you make, it's how much you keep. Unfortunately, because of the tax consequences, I didn't get to keep it. I had to throw it out. But I saved myself $30,000 in taxes that may have been crippling the following year. Because if I then went ahead and lost that, I'd have to make the money that I lost up plus the $30,000 in taxes, or well, be more taxes than that. I mean, I saved $30,000 and what I would have had to pay in taxes. I would have been significant trouble. Peter Rose, Longwood Currency Trading. Have a great day, have a great trading day, and have a great year. If there's anything I can do for you, send me an email. I only communicate through email. I don't do WhatsApp and LinkedIn and Facebook and all that other crap. The only way I will contact you or reply to you or anything is through either my YouTube channel or my email address. So if you want to make sure you're communicating with me and not some stupid person that tries to duplicate my account in a comment to you, telling you to do WhatsApp, Jesus Christ. Man, people are coming at me like crazy with that stuff, making comments like that on other people's channels. They'll put a comment under there, oh, contact me on WhatsApp with the person's picture there. These people are thieves. Don't listen to them. Email me, and if you get an email from me back, it's from me. And I'll try to do the best that I can to work with you and try to help you out without selling you a course or consulting or any of that, because I don't have time for that, really. But if you need it, we could talk about what needs to be done. In any event, I've already said this, but have a great day and have a great trading day.